Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The trading week wrapped up for the Australian dollar on a bearish note after the market sank very heavily over the last couple of days. Now crushes the level that is seen as the 60-day moving average, which was at 66.90, and now reopens this week's objective, which is at 65.50-65. Meanwhile, all eyes look to the RBA this week, which is favouring a 25 base point rate hike. However, it's more to the statement, as much anticipation expects that the RBA could leave the door open for future monetary policy tightening. So looking to the trading pattern, we can see that the negativity that holds with the RSI and MACD will weigh on the Australian dollar, and any advancement is expected to cap around the 60-day moving now seen at 66.95, and the immediate support seen at 66.35. Moving on to the euro, after a very heavy session, we can see the market is staging a modest rebound on Friday. Still, I feel the market may actually waver through the start of this week and take out the support level seen around 109.55 and maybe head towards its objective, which is seen around 107.55.80 after this large engulfing candle could put very much to a negative case and therefore look towards the bottom side. As all eyes look to this week's non-farm payrolls report, which looks or anticipates a headline of around 200,000 jobs added last month, and with the previous at 209,000 jobs. Also on Friday's release, the Personal Consumer Expenditure Price Index, which is the US Federal Reserve's preferred measure of price growth, rose by 0.2% in line with forecast estimates, while the core PCE rose 4.1% year over year, slightly lower than the previous of 4.2%. Global markets have somewhat remained cheerful after the view that we could be heading for a soft landing or soft landing scenario following the data release suggested last week that the Federal Reserve's tightening policy is now cooling off the US economy, therefore could see US interest rates on hold to the end of the year. Nevertheless, the market is still pretty much looking to the time frame, which is at September 1920 and also October 31st to November the 1st. So all eyes on the main event being the non-farm payrolls, but looking at the potential downside, as I mentioned, 109.55 is in view, and with a cap seen at 110.35. It looks like the dollar yen stole the show on Friday after rebounding 300 points, or rejecting near the key level, which was around 137.5 in light of the pattern. Not quite getting an engulfing candle, but still strength that could see the market move on to through 141.85 and head on towards the 142 to 144 area, with any pullback likely to be shallow. Sterling, but the market still looks towards this uptrend, which emanates close to around 118. In light of the pattern, the bearishness may see a challenge here, which is seen around 127 figure 20, but all eyes look to this week's Super Thursday, and the Bank of England is expected to raise rates either at 25 or preferred 50 base points, and therefore could strengthen the pound and see a rebound back to 129 to about 130. Wrapping up with gold and oil, the market is still holding to a somewhat negative price action since the posting a very large engulfing candle that supports the move down to 1,945 and the objective, which comes in around 1,915 to 35 and reassess from there. Any advancement should be limited with 1,960 to 64 capping. Well, the oil outlook is getting closer to the biggest monthly gains in 12 months. With the target reached at $78 a barrel, we're now seeing a divergence clearly across the board here. That gives me some concern that we might see prices snap and therefore move away from 80, 81 and look down towards a pullback of 77.5 and reassess. However, the longer this pattern holds and fails to bearish divergence, and therefore could see a snap onto 81 to 83, but keep an eye on how this pattern unfolds. The ADX is overheating, so I do feel that profit taking will come back into play here and expect to see a pullback. Well, that's a wrap for the start of this week. Thank you very much for joining me. As always, look out for the intro report. I hope you enjoy the rest of the day.